Hello traders, welcome back to Bunnex Investment Group. Did you know that the TDI indicator can help you sell at these particular points within the markets, right on the tops and bottoms? As you can see, this is an example that was actually taken from a TDI strategy that we'll talk about in this video. So sit back, relax, and have somewhere to write and take some notes. Firstly, here are the underlying principles. The TDI or Traders Dynamic Index can pick the right points of reversal within the markets. However, you can do so if you understand the hybrid use of time frames as we will discuss in this lecture. Firstly, the TDI can read sentiment and volatility at the same time. We look to get setups after the market engages in what we call overbought or oversold zones within the right time frame of observation. Below are the time frames and their uses. The first one being the H4 time frame. So the first step is to observe the H4 time frame TDI behavior. The H4 is also called the weekly time frame primer, meaning that the demarcations on an MT4 or MT5 on the H4 time frame marks the weekly weekly period. The first breakout of the RSI line on the TDI on H4 is basically the first sign of market reversal. So if ever we see the RSI line going outside the bands on the H4 time frame, that's the first sign of a market reversal. Therefore, step one of our strategy is seeing breakout of the RSI line out of the bands on the H4 as shown in the next slide. So here are the components of the TDI. We have the bands, right? These are volatility bands derived from the Bollinger Bands. Then the one in green is the RSI line. It's actually the one, the important part within this particular strategy. Then this is the moving 50. For this strategy, it's of no use, and the signal line is also of no use within this strategy. So we need to see the RSI line breaking outside the bands, like in this particular case. We can see it moving out of the bands, RSI line blow out of the volatility bands. So on H4, whenever we see this cross of the green line and the blue line signifying a cross outside the bands, is the first sign that the market is now at a prime time of market reversal. The next time frame is the H1 time frame. After observing an H4 RSI breakout, we shift to the H1 time frame to check for these things. The first one being multi-session M or W pattern or head and shoulders pattern, right? So we are saying after you've seen a breakout on the RSI line of the H4 time frame, we now shift to the H1 to look for these patterns. It's either M or W or a head and shoulders pattern. Then we need to see those patterns being confirmed with what we call TDI divergence. I'll show you shortly when we go to the market chart examples. Then the last thing is market entry. Below are the steps to catch the entry. We are saying the first step is to see H4 RSI line breakout. Second step is to shift the time frame to H1, then only enter at multi-session M or W or head and shoulders pattern. So if you see any of these things, you are going to enter at a proper candlestick reversal pattern, probably on the H1 or even on the M15 to reduce the widening of your stop loss. Let's now have chart examples so that you can fully be able to understand, so that you can comprehend in your trading. Before we see examples, please note that we have a free Telegram channel where we share free signals, free setups, and trading tips. Be sure to be part of this community. I'll leave the link in the description box below. Alright, so this is Euro USD, which we are going to make use of. And on Euro USD, the first thing that we are going to do is, since we are now viewing the markets in hindsight, we need to mark the points that we have referred to as the RSI breakout. We can see we are now on the H4 time frame, and then the RSI breakout points are going to be these ones. We have this one, right? Let me mark it this way. We have this one, then we have another one. these are the potential points that we were going to look for the patterns, right? Then going back, we have this one as well. The first breakout of the market of the RSI line on the H4 time frame is what is important. Then we had this one as well. So we are likely going to have 2 to 3 entries per week, per month, using this particular strategy. 2 to 3 entries per month, and those 2 to 3 entries are likely to be 100%, sometimes 50%, depending on the market conditions. So we are just going to have a look at these. So the first thing we've said is to see the breakout of the RSI line on the TDI of the H4 time frame, and now we need to go to the weekly to the H1 time frame, sorry, to check for the points that we marked. So at this particular point, we no longer need the RSI line on the TDI, because we have already seen it on the H4 time frame. On the H1, we've said we now look for M's and W's. In this case, we had an M, right? And it is actually confirmed that the relative strength is dropping. Therefore, this was going to be a beautiful market entry, probably at candlestick closure below the 13. We could have made an entry there. Then here, we marked this on the H4 time frame, and on the H1, we can see an M pattern, and the first leg being this one, the second leg, and this is satisfying, being a multi-session M, and we were going to also make a beautiful entry there. Then going forth, we can see another M, another W pattern, which is first leg here, second leg here, and on this particular entry, we were also going to make our profit because it actually obeyed. We can see the relative strength rising, telling us that although whatever they are doing on the charts, the relative strength is rising. Then here we can see that we had a shark fin, or we had a breakout on the H4 time frame, and on the H1 we had a head and shoulders, shoulder, head and shoulder. So whenever we see this particular move and the market failing to actually go to the same region, but we have another point of resistance here on the previous side to the head, we can as well assume to get a shoulder and a candlestick reversal pattern, or a candle closure below the 13 will be our entry point, right? So basically that is what we were looking for. Right now we have seen the market left after giving us a pierce to the downside, meaning that we are actually waiting to see a proper pattern as a W pattern on Euro USD when the market opens. At the time of recording this video, it was on weekend. So basically that is how we use the TDI to get market reversals, have a lot of markups and have a lot of backtesting, so that you can fully understand and comprehend this strategy. On that note, we've come to the end of our video. Thank you for watching. Like and subscribe, and see you in the next one.